Let's get into accounting standard 17, that is segment reporting. Okay, segment reporting, yes, you must have studied. Yes, there are the two types of segments. One is business segment, the next one is geographical segment. What is business segment? Business segment is a distinguishable component. It is distinguishable in what? Distinguishable in products or services. Okay, or group of products or group of services. Distinguishable from other group of products or services in risks and rewards what you have. Okay, so the examples are given like maybe like software business, hardware business, jewelry business, textile business. Yes, it could be automated manufacturing or manual manufacturing or institutional business. I mean, I'm selling, I mean, it's like industrial production, or it may be retail business, or it may be direct distribution, because the risks and rewards involved from one to another are different. Okay, and when it comes to geographical, this is also distinguishable component in economic environments. What is economic environment? Economic environment is nothing but a market. So distinguishable business, distinguishable component in the markets. Okay, one market to another market. Yes, it's like China market is different and UK market is different, US market is different. Okay, so my business is scattered in correct in all over the world. Yes, the risks and rewards related to the markets are little different. Markets also, as I told you, risks and rewards related to that economic environment compared to the other other economic environment. Okay, right. So when you have that, means that and all the business I mean segments are going to be divided into either business or geographical, and this is accounting standard 17 is a disclosure based standard. Okay, there is no journal entry that is going to be recorded. Okay, right. So next, here the crucial part is what? No, that is the definition part. What is the definition part? First, there are totally, I think, six definitions are there which are very crucial. If you don't know these definitions, no, then I can say that you don't know the standard. That's all. Okay, one is enterprise revenue. Enterprise revenue is nothing but that is the sales in the profit and loss statement. That is entity as a whole. Correct. That entity as a whole, it is there. Correct. Again, one more important point. No, accounting standard 17. Suppose my company is a holding company, so that's why I'm preparing. What is I'm preparing? Consolidated financial statement and standalone financial statement. Then accounting standard 17 is applicable only for the consolidated financial statements, not for the standalone financial statements. Okay, I need to prepare A7. I need to prepare segment reporting only for CFS, not for SFS. Okay, this point just I got it. I just remember and I told it to you. Okay, done. So next one is what? Segment revenue. Okay, when the segment revenue, that means if the segment is not there, what will not be there? Correct. That is what? Segment revenue. Right. So what all will be included? What are the direct sales which are made by that? Okay, what are the sales which are allocable in the sense, maybe I'm selling it to some party as a package of segment 1 segment 2 together, I'm selling one product, so then that revenue is supposed to be allocated among the segments. Okay, at the same time, inter-segment revenue, one segment sold to another segment, that is also part and parcel of segment revenue, but this does not include any extraordinary income. Okay, any interest income, dividend income. Why interest income, dividend income? Interest has come because you must have made fixed deposits, how you must have purchased the debentures. Correct. Even if your segment is closed, fixed deposit will continue and investment in debenture can continue, because segment is like operations. Correct. Now, operations close. This is investment activity, that is operating activity. There is no link. So these are all independent things. That's why we should not include such kind of income as segment revenue. Okay, gain or loss on sale of investment, that will continue. That is nothing to do with the operation. These are two are investing activities. Okay, segment expenses, exactly ulta. Wherever I say direct sales, this is nothing but direct expenses supposed to be taken, and reasonably allocable expenditure and inter-segment. Correct. Now, when for one company it is an inter-segment sale, for other company it is an expenditure only, right? And it should not include same like extraordinary item will never be included, interest expenditure will not be taken, loss from the sale of investments, obviously ulta I am just telling, should not be taken, income tax expenditure also should not be taken, any general administration expenditure, I mean to say basically head office expenditure, such expenses should not be linked to any segment, because see, if I have a head office will continue even if one segment or one line of business is closed. Okay, so that may be allocable, but you should not allocate it. Got it? Right. So because those are administrative expenses. right? Segment assets. What is segment asset? The first line itself is more than sufficient. Segment assets are operating assets. Operating assets means which are required to be used, are the assets which are coming out of the operations, both which are required to do the operations, which are coming out of the operations as well. So what are those? If I want to do business, I need the fixed assets, I need the intangible asset, I need the goodwill. Yes, goodwill also will be part and parcel. Correct. Now, at the same time, what will come out of this? What will come out of means inventory will come, prepaid expense will come, accounts receivable will come. Correct. Now, maybe some loans and advances from the suppliers. Correct. Now, yes, advances we have given to the customers. I mean, we gave it to suppliers. I mean to say what I said told. Correct. Yes. So whatever is arising because of this supposed to be part and parcel. Correct. Now, but so sir, loan I have given. No, that is not a operating business. That is an investment activity. It cannot be taken into account. Got it? Investment in equity share. Why will it come? It is an equity investment activity. It is not operating activity. Same fashion, segment liability. Segment liability also, my dear. Yes, operating liabilities which are arising from the business. Loan taken. No, it is not operational. It is financial activity. Correct. Na? But creditors. Yes, because of operational. Correct. Na? I mean, provision for warranty, operational. Provision for gratuity. Provision for superannuation. Provision for bonus. Yes, because all these are all the operation. These are all operating related. That's why it is supposed to be included here. Okay, right. So why did we discuss all these definitions? These are all very important for these things. Okay, we may be having 10 or like, let's say some 20 segments are there, but every 20, all the 20 segments will not be presented on the in the segment reporting. That's why the standard said what should be reportable. What should be reportable means they have given some 5 points. Out of these 5 points, if you satisfy any 1 point, then it is going to be reportable segment. Out of 5, any 1 is sufficient. One is the segment revenue criteria. Segment revenue, it may be internal revenue or it may be segment internal revenue or external revenue, which is greater than or equal to 10% of the total revenue of all the segments. Okay, segment revenue is greater than or equal to 10% of total revenue of all the segments. Got my point? Next, second one is segment result. Segment result situation. First, what are we supposed to do? Yes, aggregate of the all the segment profits or aggregate of the all the segment losses in the what is that absolute number. Absolute number means without sign you should take it, whichever is higher. Correct. Now that you are supposed to compare it with the segment results. Okay, if individual segment result is greater than or equal to this higher number, whichever 10 correct higher 10% of this 10% of this higher number, if it comes, then that should be considered as reportable segment. Then segment asset. The segment asset, which segment you are checking? No, if that segment assets are greater than or equal to 10% of the all the segment assets. Then it is going to be done. Next, a management discretion. Yes, if the management feels that they are expecting a much growth important, I mean this is very important to the company, even though right now it may be having 5-6% of the total segment assets or liabilities or profits, but if they have a lot of expectations on that, they wanted to show this information to the members. Yes, obviously that is their company, correct, and their wish, they wanted to present it to the members. Why not? They can do so irrespective, even though it does not satisfy any above the 10% criteria. And the last one is overall external revenue criteria. What is this external revenue criteria? We should check the percentage of the total revenue only of the reportable segments with its enterprise revenue. Okay, with its enterprise revenue. When should we, I mean, correct. What are we supposed to do? If under above this 1, 2, 3, 4 category, whatever you have selected, some segments you must have selected. What is the external revenue of all those segments? Club it, and that correct. Now that divided by enterprise revenue you do into 100. If you try, is it coming 75% coming? Then fine. So no, it's not coming still. Not coming means you need to add some more segments, even though it does not satisfy 1, 2, 3, 4. You just need to do. You need to add it. You need to ensure that 75% of external revenue is reported in the segment reporting. This is the one of the criteria. Next, if it becomes reportable segment, now what is supposed to be disclosed? Yeah, for the disclosure purpose also, there are like primary segment. First, out of these reportable segments, first you need to decide whether business segments is going to be primary segment or whether geographical segments are going to be primary segment. That you have to take a call. Okay, what is the, I mean, how do you take a call? Sometimes it will be professional judgment. Sometimes, yes, what management is thinking, what priority is given by the management. Are they looking and taking the decisions based on the business segments? Are they looking and taking the decisions based on the geographical segment? They just need to look at it. Accordingly, they can come to a conclusion. If it is a primary segment, yes, these are the 7 points. I mean, 7, I mean, elaborated, so 9 it will come. So 9 points where you need to give the disclosure. One is what? Revenue from the external customers, intercompany revenue, segment results, segment assets, segment liabilities, and what is that? I mean, current year additions of the property, plant and equipment, intangible assets, and those things, and depreciation, amortization, expenditure, any other non-cash expenditure, and reconciliation. What is the reconciliation? Because total segment assets will never tally with the balance sheet total assets. Correct now. So why it doesn't tally? As we told, investments we don't consider, loans and advances we don't consider. Like that, some items you must have not considered. Income tax asset, no, we don't consider. I mean, advance tax also we don't consider. Deferred tax also we don't consider. So such kind of items, since we have ignored it, but you have to give a reconciliation. That is the point it is going to come in. Okay, that's all. Secondary also there is some more disclosure, but that's not that relevant for the quick revision purpose. Let's look at next standard, which is accounting standard 24, discontinuing operations. See, the point is what? Discontinuing. It is not discontinued as of, it is not closed as on 31st March, but yes, they have taken the decision. They must have made the announcement. Now you are supposed to disclose it. What should I do if it is, if you have this, if the management has decided to discontinue some operation? First thing, what is an operation? Operation is a component. Again, the operation is a component which is distinguished. Yeah, it is distinguished. What is a distinguished here? Yes, it is distinguished in its operational purpose and financial reporting purpose, and it is a component. It is a component in the sense it's a segment. But remember, if I say segment, it is not necessary to be a reportable segment. It should be a segment. That means it doesn't need to satisfy the just now discussed 10% criteria or 75% criteria, not required. If it is a separate line of business, that may be a business segment, that may be a geographical segment. Correct now. If the management decided to sell it off, or if the management decided to close down, correct now, whatever the reason. Sir, how do they sell it? Yeah, they may sell it in lot. One shot may they can sell it in total, or it may be correctness, I mean, demerger, and or it may be what is that, selling of the components. I mean, piecemeal disposal we call. What is that piecemeal disposal? I may be having 1000 items. 1000 items may, correct, I may sell 100 items to one person, 20 items to another person, another 30 items to another person. Like that, if you start selling individually, then it is called, then that is a piecemeal disposal. You decided to sell whatever the way you wanted to do. You sell it in one shot, you do spin off, you do demerger, you do whatever the way you wanted. Are you going to discontinue the line of business? Remember, not one factory. Suppose I have a textile business, I have some 4 factories. I wanted to sell one factory, then you will not fall under accounting standard 24. If you say I want to discontinue with all the 4 line of business, I mean 4 factories, I wanted to close off. I want to just put one namaskar to textile business, sir. I wanted to get into some gold business. Then it is a discontinuing operation, which requires a separate disclosure, which requires a separate way of treatment. Okay, what are we supposed to do when you have taken the decision to discontinue? You have to disclose it. Sir, where should I disclose? Yes, you should disclose obviously to the interested parties, maybe via mail or via media. You will be able to do that job. Okay, now obviously you will not prepare the financial statements on daily basis, right? So when do I do the initial disclosure? Yes, whenever this criteria, whichever is early, basically. Okay, what is the first one? When the company has entered into binding sale agreement with some other party to sell it off this, I mean this, to discontinue this, or we have not sold off anything, but board has entered into agreement. I mean approved by the board of directors. What is that? A detailed plan has been, I mean a detailed plan, formal plan to discontinue. We decided to discontinue this, and you should, and that's all, not internally decision. You must have announced the same thing to the interested parties. Correct. Now, formally you have announced it to the public interested parties. Who is interested parties? Obviously, employees, suppliers, their customers, their lenders. Correct. Now, all these interested, correct. Now, employees. you should disclose it. Correct. It cannot be a surprise to the employee like tomorrow you're not going to be there. Correct. Yes, you have to inform that. That's a basic thing. So what are you supposed to disclose? Yes, I have given like from A to F. I have given the information. These are the important points which you need to disclose it. This is the initial disclosure event. Remember which date you have initially disclosed. That is supposed to be disclosed in the financial statements. This is the date initial disclosure event. You have to disclose it. And next, on the balance sheet date, sir, should I disclose it? Yes, you have to do. You have to disclose it when if it is discontinuation is not completed. No, you have not sold it. They're still going on. Okay, when they decide this, no, yeah, there will be some presentation differences also will come. What are you supposed to do? You are supposed to restate the previous year profit and loss statement also. What is it? What are we supposed to do? See, I have got four businesses, I mean four line of businesses, but out of that one business, textile business, I wanted to close it. Not a problem. Textile business related sales, technical business, expenditure, textile business, everything related to textile business should not be there in the normal top line item. Revenue from operation, only three businesses ka information. Expenses also three businesses ka information. Everything should be there. Got my point? Just before, correct na tax. Right, what are you supposed to do? Then you should write in one line, this is the business from, what is that? You should say this is the profit from the textile business, from the discontinuing operations, and you give a note number in the notes to financial statement. There you write sales, expenses, this is the profit we got, this number only coming in the profit and loss statement. Now remember, not only current year. Correct. Now, if you remember current year, I have given three businesses ka sales on the top line. Correct. Now, the previous year, if you give four business ka sales in the top line, then obviously it will be a wrong comparison problem. Correct. Now, that's why what are you supposed to do? Previous year profit and loss statement also you are supposed to restate it. That means previous year related textile business is related items profit should be showed separately, so that comparative will be really comparable. Okay, right, and right on the balance sheet date still you are not yet completed. No, then you are supposed to do description of the correct. You are supposed to disclose this information. What is the problem? Which business segment is business segment or geographical segment is going out? Which date initial disclosure event has happened? How many more days you are expecting? What is the remuneration that can come in? Correct. Now, what is the pre-tax? Yes, because I told you before tax. Before tax, what is the profit or loss? Net cash flows from the discontinuing operation, whether operating or investing or financing, that also you are supposed to disclose it separately. This is the crucial part of disclosure. Sir, what about accounting when you are disposal? When you are accounting, correct now, accounting is again accounting standard 10 and accounting standard 28 will be applicable. So what is the link between this? Obviously, no, when the asset is held for sale, correct. Now, when asset is retired and held for sale, accounting standard 10 says it should be recognized at carrying amount or net eligible value, whichever is lower. Correct. Now, discontinuation, isn't it one internal indication for impairment? Yes. Then formally you are supposed to test for the impairment loss. If it is on sale or on discontinuation, if you are expecting to get a good big loss or something, then you are supposed to make the loss, because even though it is going to be discontinued in the future, yes, it is announcement itself is a big thing. You are supposed to do that job basically. Okay, right. This restatement matter I have already explained it to you. Let's look at this accounting standard 18, related party disclosure. Again, as per the, it is also a disclosure standard. Correct. Now, here also don't expect any journal entries like debit, credit, something, nothing is going to come. Where are we going to disclose? Obviously, in the notes to financial statements. What do you disclose? Related party transactions, related party balances, and relationships. Okay, yes, related party transactions, related party balances, and related relations. Correct. Now, yes, this company is my holding company. This is my subsidiary company. What kind of transaction? Is it a sale, or is it royalty, or is it any kind of, purchases, or, a transfer of intelligence or knowledge, know-how, whatever it is, right? Every transaction is going to be disclosed. Yes, it has got its more importance. Correct. Now, that will be discussed obviously in the detailed class, not here. Right. So what is related party transfer? Who is related party first? So in this standard, important points are who is related and what is supposed to be disclosed with these related parties. The first and crucial part, this, if you remember these 5 points correctly in the standard, no, you would remember almost everything in the standard. First one, what is that? Those entities which are directly or indirectly controlling me or controlled by me, correct, are under the common control. So that means my parent company or parent company is supposed to be disclosed. I mean that is also a related party, and my subsidiary company, sub-subsidiary company is also related party, and correct. I am a co-subsidiary. Correct. Myself and another company are both of them are controlled by same party. Then we are brothers. Correct. Now, like my parent is same. Parent is same means co-subsidiary, fellow subsidiary, another word people do use. And second thing, if your associates are joint ventures, correct na? Associates and joint ventures are, I mean, my company associates. Yeah, my company associates. What is associate? Associate in the sense where if I have got 20% or correct na, more than 20% stake in general. Yes, if I have significant influence over the decision, significant influence if I can exercise, then yes, the other company is my associate company. So significant influence generally will come from the voting rights. Correct. Now generally 20 plus percentage, 20 or 20 plus percentage is there. It is assumed that we have got significant influence, but 20% is not final. Even if you have less than 20 percentage, but are you exercising the significant influence? Correct. Now, right? Are you participating are you participating in the finance and operating decisions of the entity? Yes. Then you are the what are we are investors. The other company where we have 20% stake, that is associate. For me, associate is a related party. For that company, yes, I am a related party. Correct. In the same way, joint ventures, yes, jointly controlling the entities financial and operating decisions of the company, yes, that is also going to be considered. Next, individuals and their relatives together. Correct na? Right, whoever, if you have got any significant influence, correct na, who has significant influence on my company or who has got control over my company, they are also related to the entity. Who is related? I mean, individual ka relative. Who is an individual ka relative? This person ka, I mean, father, mother, correct na, sisters, brothers, I mean siblings, and wife and their kids. That's all. So this is a related. I mean, who is relative? The relative definition. Next, key managerial personnel and the relatives of the entity. So who key managerial personnel means who will be taking the responsibility. Correct na? Who will be responsible for the actions? Who is trying to, I mean, manage or control the business operations of the entity, those people. Correct. If you are a director, what are you? I mean, sir, I am a part-time director or non-executive director, you people call. Correct. Whatever, non-executive directors cannot be a KMP. It should be like full-time director, I mean whole-time director or executive director. People use different language. Fine, only those guys are going to be key managerial personnel to the company. Sir, company secretary is not a key managerial personnel because they are not responsible for the operations. They are responsible only for the compliances. They may be KMP as per the company's act, but not as per the accounting standard 18, because accounting standard 18 has given a KMP a definition. Company secretary and non-executive directors will not fit in the definition. That's why any remuneration given to company secretary should not be disclosed. Okay, right, that is the one. And next, there are two entities. These two entities are nowhere related actually, correct now, but they are getting related through an individual. How is this guy is related? See, one way you maybe have one relation. One side relation, you may be having a minimum of significant influence. Another side, correct now, another side, you may be having either significant influence or you may be having what is that, control, or you may be having, correct now, KMP, right? Under that circumstance, yes, because of this individual, since he is related to this entity, the same person is related to another entity. Now these two entities are getting related. Okay, the transactions between these two entities is supposed to be disclosed. One more question will come, sir. We are transacting at arm's length price. Correct. Market rate only I am selling. Market rate only I am buying. Sir, even though if you are selling at market rate, but still it is not supposed to be disclosed. Standard is not. I mean, not saying that if it is arm's length transaction, you don't need to disclose it. No, my dear, you are supposed to disclose it even if it is an arm's length transaction. Okay, right. and these are all the parties are considered by the standard as not related parties. Who is that? Sir, there are two companies. These two companies common director is there. Okay, maybe he may be KMP. He may be KMP for this company. He may be KMP for this company. Just because you are a KMP, or just because you are a common director, correct? You cannot bring the relationship unless until you should be having one side significant, at least significant influence, or some control should be there. Just because you are a common director here, no, that those companies are not related party. And if I have got a single customer, a single supplier, single franchisee, single broker, or whatever it is, no, so those companies, those parties are not going to be related parties. Providers of finance, some banker giving me money, just because they lent it, they will not be called related party. No, correct. Tomorrow when I get the money, I'll repay their money and I'll say bye bye. Relationship will not be like that, right? So yes, so trade unions, public utilities, and any government department, just because I have to pay money and I'm dependent on something, they have to give license. No, no. That's why these parties are very clearly considered, correct? They are very specifically considered by the standard. They are not related parties. Okay, what is supposed to be disclosed? Related party transaction. What is related party transaction? When transaction is taking place, that day, whatever I told just now, there should be that relationship. Okay, so relationship is there for first 6 months. That time some transaction happened. Yes, the transaction is supposed to be disclosed. But sir, in the middle of the year, relationship got cut. What is that cut? Suppose somebody was KMP appointed as a CEO or something like that. That guy resigned and went. Okay, but still we have some transactions with that guy after, the next 6 months where he was not employed by the company. The next 6 months transaction not supposed to be disclosed because there is a transaction, but that time there was no relationship. Then it is not called related party transaction. Okay, right. So what is a transaction? So transaction is a transfer of resource, a transfer of obligations between the related parties, whether or not price is paid. Okay, sometimes I'll give the example. I'll give my software license, but I'm a holding company. I'm giving you license software. Okay, but I'm not charging you 1 rupee. Also, I'm not charging. Still, it is supposed to be presented. Okay, right. Next, one more point. Generally, these things, no, sir, I have got 150 associates are there. So should I write every associate information? No, not at all required. So out of 150 relations, out of 50 associates, sir, I have transactions only with 5 companies. Only those 5 company data is supposed to be given. Don't give the data of all 150 companies. But I have to give a disclosure of who are all my parent companies, who are all my subsidiary companies. This data is to be given mandatorily. That means where there is a control exists. Even though there are no transactions, you have to mention. But see, I told you your parent and your subsidiary. That's all you are supposed to give. But not fellow subsidiary. We finish transaction with the fellow subsidiary, then only fellow subsidiary information should be given. Otherwise, it is not required. Okay, what to disclose? These are the information. Name of the related party, correct description of relationship. That's what holding company, parent company, associate company, whatever it is. He's a KMP or he's a person who has got significant influence, or commonly, one person has got a common stake or something. Correct. Now, what description was? Description of transaction. Is it a sale or purchase, or what royalty fees or dividend amount? What a kind of transaction? Volume of transactions. If whatever the related information is applicable to your company, you are supposed to provide that data as well. Okay, that's it. That is about your accounting standard 18. Let's go to accounting standard 25, which is interim financial reporting. Okay, yes. See, interim financial report. What is interim, sir? Interim means if you are going to report, you are going to prepare financial statements for a period less than 12 months. But this is not applicable in case of, it is not applicable in case of like, if you are preparing like for first year company, sir, that's why it is, I'm preparing for less than 12 months. Is it interim? No, it is not interim. Okay, where you are there for the full year, but you are preparing. Why do I submit? You may submit it to the banker, you may submit it to the to SEBI or whatever the purpose. If you prepare it, then it is called interim financial statements. So what are we supposed to do with it? Correct na? Yeah. If it is less than 1 year, interim financial reporting, that can happen in 2 ways, but mostly everybody will do it in the second way. First way is your complete set of financial statement. What is complete set of financials? Complete balance sheet, profit and loss statement, cash flow statement, notes and notes to financial statement, full complete information. What if it was a 31st March, what you would have prepared, that only will be prepared. Generally, very less number of people will prepare like this. See, why do you prepare interim financial statements? Objective is we want to give an update of the financial position, financial performance to my investors. We don't want them to wait till the 1 year completion. Correct. Now, let's give information. What is happening in the company? Is this my company growing or falling, or what info? Something should come. Otherwise, they will be, forecasting too many nonsense things. Imaginary things will happen. Accordingly, they may be investing, not investing. So many things will be there, right? Isn't it? That's why. So, condensed set of financial statements. Next. What do you mean by condensed balance sheet, condensed profit and loss, condensed cash flow statement? What is the selected explanatory notes? What is condensed balance sheet? Condensed balance sheet in the sense main top headings will give. That means just the format of the top. I mean to say PPE. That's all. We'll give only PPE. We don't go to schedule and will not give PPE includes land, building, plant and machinery. No, don't give like that. Okay, trade receivables. That's all. Trade receivables. We don't say what is the trade receivable above 6 months, below 6 months. Correct. Now, what is the provision for doubtful debts? Correct. Now, what is the, I mean to say, aging report, trade receivable aging report. Nothing, only top line items are supposed to be given, not the in detailed information is going to be given at the same time. Even if it is for a cash flow statement, no, only one line item. Cash flows from operating activity, cash flow from financing activity, cash flow from investing activity. Like that, only one line will close it. That's all. What is selected explanatory notes? Selective explanatory notes, we don't need to give every information what you had given in the annual report, only new information. What is the new information? So say accounting policy, don't need to give. If you wanted to give, I mean to say, if there is any change in accounting policy, then you provide it. Otherwise, don't provide that change in accounting policy. I hope you understand my point. Correct now. But segment reporting you are supposed to give. If there is any change in the capital structure, you have to give. If there is a proposed dividend, you are supposed to give. If there is a discontinuation or something like that is taking place, then you are supposed to give it. Something which, extraordinary activity happened, which you feel, management feel that let's give this information to the members or to the investors of the company, then yes, you are supposed to provide that information also. Hope you understood. Yes, exactly. Okay, next. Sir, what is the frequency of? And it's not frequency, if it's a balance sheet comparison. Correct. The balance sheet if you are preparing for 30th September. But 30th September of 2025, if you prepare it, next year's comparative will not be 30th September. That comparative is going to 31st March itself. Okay, profit and loss statement. Profit and loss statement, like three things can happen, but third thing is not mandatory, only when it is required. Okay, what is that? Current, interim, that for the 3 months or 6 months, your interim period also you are supposed to give. Cumulative, if you are preparing on September, from April to September, your profit also you are supposed to provide. Correct, but you have to give 12 months information if it is, what is seasonal business? If you are doing a seasonal business, 12 months, in the sense 30th September 2024 to 30th September 2025, 1st October to 30th September 2025. Full complete 1 year ka information should be provided. Cash flow statement also, 6 months information and 12 months only if it is seasonal. Otherwise, it is not required at all. Okay, sir, how do you recognize it? But there is no different accounting treatment is going to be explained by this accounting standard 25. Okay, right. If it is 30th September, yes, agree. If you are on 30th September, but you should imagine that if I am there on 31st March, would I have recovered? Would I be recognizing the asset, liability, income, expenditure? Tell me. If you say yes, if it is in 31st March, I would have recognized. Today also you recognize it. Okay, it's not necessary that we have a separate rules and regulations. Nothing. Sir, I am into seasonal business. Still, there is no new concepts or something like that. No seasonal business purpose. If you are seasonal, no, that's why only I have to give 12 months kind information. That's all. But separate rules and regulations are not there. I told you, if it is 31st March, what you must have done it. Would have recognized? Yes. Then today also you recognize it. Other than no, if it is on 31st March, I would have not recognized it. If you are not recognized, then why are you bothered about? Now we don't recognize such kind of thing. Right. And there is one special point. What is the special point? Yes, income tax expenditure. How do you recognize? We have to find out one average, weighted average rate of income tax. That rate you have to apply it on your profit before taxation, and that's all you are supposed to determine. So how do you calculate this weighted average rate of income tax? There are like step 1, step 2, step 3, something like that. First, step 1. What is the step 1? What is your annual accounting income? Correct na? Annual accounting income, right? That annual accounting income you're supposed to forecast. You getting my point? So do you do forecasting? Yes, mine. Every company does it for the TDS purpose. Do they do forecasting? Yes, they have to do forecasting. Accordingly, that 15%, 25%, and percentage of tax you are supposed to offer as an advance payment. So forecasting is supposed to be done for that. Okay, next point number 2. Step number 2. What would have been the tax liability for that? What would have been the tax liability? Taxable income and tax liability both. See, accounting, first step is accounting income forecasted. Accounting income will not be offered to the taxation. No, accounting income plus or minus some allowances, disallowances as you learned in the tax, then only you will get the taxable income. On the taxable income, then you will find out what is which rate is applicable, 22% or 25% or 30%, whatever your company, correct? Surcharge is applicable, execution is applicable, you apply, determine the tax liability. Got it? Right. Now third step is what? 2 divided by 1. That means what? What is the tax liability? You got it? Divided by accounting income. Accounting income, not taxable income. Accounting income into 100 you have to apply. Then you will get the percentage. That percentage you have to apply it on the accounting profit before tax. That's going to be your interim profit before taxation. Okay. This is with respect to, my dear, accounting standard 25. Okay.